What's up everybody, Tom here with another video. We've seen increased volatility in the last couple of weeks. We're now in October and many people are going to be thinking, okay, September's done, now we move to the big bull. Is that going to be true? We'll be trying to answer that for the week ahead in today's video. We've also seen some pretty big numbers coming out of Tesla, so that could be interesting. And of course, we'll be covering all the markets today, including the Nasdaq, SP 500, Tesla, Apple, and more. There's a lot to discuss, and it's going to be a super exciting week. Remember, guys, non-farm payrolls this Friday. Stay tuned. Okay, well, welcome to the market recap for, of course, the markets that closed on the 1st of October 2021 and a look ahead at the week ahead in terms of the key levels across the markets. And when we're taking a look at a heat map, it's always worthwhile understanding some of the movements that happened. Here's the Friday's session, and you'll notice the FANG stocks, specifically Microsoft, Apple, Facebook, and Google, were doing quite well. The financials came back pretty strongly. And if we switch it to a 1 week of performance, you want to always put it in perspective. So here you'll notice that while it looks like Friday was great, the overall week was still quite bearish. Let's take a look at the session to understand what Wall Street were doing. Were they buying or selling into the close? Well, the Asian session tells a story that even this chart can't tell. It was actually down further. Then the market rallied into the open, sold off early for the first hour of power with retail, and then went in the direction of bulling into the close. It actually closed almost perfectly to where Wall Street wanted it to close as well for optimum options profit. And we'll be talking about that. So you'll see all markets closed up, and they were led actually by energy, up 3.36%. And the worst performing sector of the day was the biotech sector, down 1.7%. Let's move into the technical analysis. We'll just quickly gloss over the PCC here, the put-call ratio. And this is a number where you don't really want puts getting too high if you're expecting bearish sentiment. Now you might say, but Tom, puts equal bears in the market. Yes, but if there's too many of them, it does what we call a put wall. And put walls are not ideal for somebody that's looking for bearish action. Remember, when other people don't expect something, it generally happens. So that's why last week we knew, or at least we had a suspicion, that the S&P 500 was going to close somewhere in this range. Really, really tight between that 430 and kind of 435, 36. That was the expectation for the week, and we ended up getting it. Let's take a look at the actual session. So the session took out a new low. It actually closed, or didn't close down here, but it got underneath the new low. That would have taken out a lot of people's stop losses on margin that were over here. Remember, that's a little bit of a trap in itself. We have had quite a lot of volume here on the SPY. So you'll notice a lot of volume. And what I want to show you straight away is not only are we below, of course, our channel here, our ascending channel got broken. It's now got that peak, that trough, that lower peak, and not quite a lower trough from a close perspective. We're looking for that still. But this is a sequence that still looks very bearish in the market. Almost a 2050 cross here on the moving averages. We'll go through the resistances a little bit later in the video, but this is very important. And you'll notice we do have that 436 area that we'll be watching closely through the Monday session. If we go over to the SPX, it looks exactly the same. Actually, what I would be doing here is I'd be drawing a little bit of a trend line across these peaks. And I would also be recognizing some of the key levels that we're going to find as support and resistance. Now, one of the big supports is obviously going to be 4,300. We closed below that in the daily, let the floodgates of the bears come through down to somewhere around that 4,200. Eventually, we wouldn't mind seeing a 4,000, 4,050. We'll explain that in just a few seconds. But overall, the big key resistances are going to be 4,385, 4,400, where it's going to meet with these two moving averages, and these should act as what we call dynamic resistance. And if you're wondering, well, where, Tom, did the bulls and the bears truly lose it? Well, the bears win underneath 4,300 and they get to push to their next level. That's going to be a big one for Wall Street. And the bulls completely destroy the bears around this zone up here. So that's when you break through that 4,460 previous peak. If that occurs, you've put a double bottom in the market, and you would be thinking at that point, we're going to all-time highs. That was just the correction, and we're moving on. And this is most likely still, guys, a correction more than a crash. And I want to reiterate that. A lot of people are going to be calling, doomsday prepping kind of numbers. We need to put the whole thing in the market perspective. It still hasn't even touched something that it generally does, which is the 50 exponential moving average on the weekly. This is what we call a standard correction area, and it's very common and actually very important for a healthy, yes, I said it, healthy style of market. So we just closed on the weekly 20, which is a great pullback. Hey, this has been every single one of the dips so far has hit the weekly 20. And for bulls out there that are buying this zone and saying, okay, that's the best we're going to get, you would be correct. I mean, it has been, in general, the best pullback zone. If we're talking about where a good correction comes back to, though, it's the weekly 50 exponential moving average. This one, we'll detail it. Let me go back in history. During normal corrections, 50, 50, 50. See how they all buy up. 50, 50 buys up. Let me go through more time. There's a bigger, deeper one. It closed under the 50, a huge deal. Get ready for a bit more of a bloodbath in the markets. Let's go back over here and think about the 50. 50, 50, great corrections. Great areas of picking up. Closes below, bit more of a bloodbath. That happens usually once every couple of years. Let's move through it. 50, 50, 50. So if you were taking statistics and you were thinking, okay, which are the best two levels to buy the dip? The 20 and the 50 would be pretty exceptional levels from a technical standpoint. If it closed underneath the 50, maybe you want to hold some powder back, some potential money back, because every time it does that, it does tend to make a new low. It has that kind of dead cat bounce rally, and then it comes back later. Look at this, goes underneath the 50, hovers, gets lower, and then gives real value. Now, obviously the pandemic's different, but this 50 is something that a lot of people are expecting and hoping for. And it's where the previous support was back in May. It's a good level, but right now we're on the 20. So we need to also see that 4,300 close below to really allow the bears to come out. So I mentioned earlier that we have these options, and these options are telling us where there's put walls and call walls. And for anyone that's just come to the channel, well, firstly, subscribe if you enjoy the content, does help out. But basically, we want to understand where Wall Street sees optimum money or optimum profit. Now, you need to understand that with options, around 70% of options expire worthless. So if that's the case and they expire worthless, it makes sense that if we can find outlier points where there's tons of options sitting there, that there's a good chance that the market will try to stay within those ranges. Now, it's not a guarantee, of course, nothing is. You want to bring your technical analysis and other analysis together with it. But where we closed, if you noticed, is right around that put strike for last week. So if we were able to close kind of like in a U shape here, somewhere in this range here, Wall Street are getting crayfish dinners for everybody because they're very happy, and all of these options, all the calls expired worthless. This put barely expired in the money. This put expired worthless, and these poor people down here, they're very sad. They can't afford anything anymore because they've lost all their money on their puts. So overall, that's how we use these put call walls. So now that we've explained that, let's take a look at this week ahead. Now, this will be an evolving situation. We'll start to see where people start stacking the calls and the puts. But you'll notice there's a few people at 460. I think they're pretty optimistic, but good luck to them. There's a few people sitting here at the 440 strike as well. So that's a little bit of a call wall. We don't necessarily expect price to be able to slam through that price very easily. And then there's a huge amount of puts randomly sitting around that 380, it looks like. And you can get this information from free resources and put it together yourself, or you can jump into our private community, free 7 days trial, and grab this on your favorite stock and everything like that. It's one of the parts of the algorithm, along with all of our daily content that we produce. So jump in, 7-day free trial, and the link's description down below if you're interested, guys. So where do we expect the market to be this week? Well, of course, we're going to see some evolving situations. I believe if the market does decline, let's go through 430, then you will tend to see strikes like 420 become extreme. Strikes like this one become much, much higher. And that'll put in what we call put walls. If we do end up finding some further bullishness, what you might see is while 440 is already very popular, 440 might go out of control. And as that situation evolves throughout the week, we'll get a very good idea of the levels that we should be trapped upon come non-farm payrolls on Friday. So that's how we use these put call walls. We also know that we want to go out to the third week of every month. And this is the third week. We have here the big options expiry. And guess what? Tons of calls around 450. And we've been using this as a bit of a guide that we expected market weakness to come in, because some poor retail traders have purchased these 450 calls. They've purchased them a month and a half out after we saw that mass euphoria come through in August, where everyone thought the market could never drop again, even 1%. And this, I do not expect to probably expire in the money by much. And that's why we're thinking this market could be either holding pattern or at least stuck in a range of declining, not really heavy bull moving forward, because this is a lot of calls sitting there randomly in only, less than 15 days now to expiry, and Wall Street will not want to pay them out. So hopefully that helps you guys, and it gives you a bit of an understanding of how we use these options a little bit differently to how other people do. A lot of people misinterpret, I believe, how the market works, and the market is out there really to kick your ass. And that's how it is. It's not there to make perfect sense from the way that traditionally people look at it. Yes, okay, if you went and buy Apple and come back in 3 years' time, you're most likely going to be correct and you'll say, I'm the best, I'm the reader of the market, because you bought quality. But that's investing. When it comes to trading, you need to understand that they're sneaky and they're out to get you with conventional thinking. Let's move over to Tesla here, because we've been kind of bullish on Tesla the last couple of weeks. We got a little bit of a sell-off, but realistically, Tesla got very close to the 800. And anyone that was profit taking, 800 was clearly a level. Just underneath is what you want to do from a psychological standpoint when you get close to these levels. If you ever get to a $100 price target, let's say the stock's never hit that, where would you be looking at taking profit? Between 98 and 99. Why? Because it's less likely that it's going to straight hit 100, because that's what everyone else is doing. You've got to be a little bit nimbler and a little bit faster. Now, I don't think it's over for Tesla. As we saw at the start, the actual delivery of vehicles tends to be pretty good, and it seems pretty good. That buying off that 760, 762 zone, well, actually went not quite down there, was pretty strong through the Friday session. Very happy that it picked up off that. And we're still stuck in the range of this long leg doji. So remember, what this is doing is it's basically coiling in price. If price is able to expand past $800, the amount of people on stock twits, the amount of people on Wall Street bets, the amount of general consensus buys that will come through from retail, and this is a retail traded stock, will be pretty damn huge. On the left-hand side, we learned that when it got through this zone, it slammed up to it. Then it came down, found support, bought back up, found support, bought back up. So we know that if we get through 800 from a technical standpoint, there's a good chance that it's going to enter a participation zone up into this 880 area. 880 is also a lucky number in many countries. So it makes sense. This is the kind of level that we're looking for. And then we want to look at the options wall. We also have a very great trend line. If people are looking for bigger dips, this is something that's going to be very interesting, I think, should the market kind of collapse or correct here. And Tesla will not be immune to that. It might be stronger, but it will still come down. So we've got that bit of a trend line there. Let's have a look at the option strikes for the week ahead. Where are all the options? Well, I don't know who's doing this, but there is a consensus attack on Tesla recently with puts. And in many ways, what it's doing is it's opening up the possibility of actually going longer. There have been consistent $700 strike puts open every week now against this stock. And it reminds me of back in the day, many years ago, where everyone shorted Tesla. They were all buying puts. And what did Tesla do? It just went up, guys. It kicked their asses. And actually, retail was more correct than anyone else on this stock. While Wall Street attacked it, there was... And even a lot of other big hedge fund managers, they didn't want to expire any of those puts worth anything. So it just kept going up with the amount of retail buying the stock. So we have quite a lot of puts open in comparison to calls. 800 is, of course, a strike we'll have to watch heavily, because you can see here it's already been opened for the week ahead. And we'll be evolving this situation throughout the week. So we've got like an 800 resistance, and it looks like we've got a bit of a put wall starting to appear around 750. So we'll continue to evolve that situation. Let's now take a look at Apple, because it almost did what we exactly wanted. And we know that Apple is driving the markets. It fell underneath that 141, 142 support on the Friday session, but it didn't close the all-important daily underneath. It actually rejected with what we call a bullish pin bar or hammer. Now, we want Apple, if you're a bear, underneath this 141, because if that happens, the Nasdaq will also most likely collapse, and because it pulls it with it, and then we move towards that 130, 135, that beautiful trend line that's gone through so many buy the dip style scenarios recently, and I'm sure Wall Street will be looking at it. With a big hammer like this, many people will come in and say, oh, I'm feeling bullish, and rightfully so. This is no doubt a bullish style of candle, but you're looking for that little bit of follow through action. You probably want to make sure you get past that 145. And then at that point, yes, I think there's a lot more chance of success. And once you get through here, what have you done? You've created a double bottom and boom, boom goes the buyers. All the buyers start to accumulate positions. They go in. They've already been positioning in with stop losses throughout this gain here. And once this happens, everyone gets involved. Then you start to see articles written about it, etc. Remember, TA gives you the idea of what should be happening before it happens. And you can look at those key resistance breakouts, such as this 145, such as here, and know that there's more chance that now that's changed trend. So for bears, you're looking for it to close below here this week. If it does, we're looking for participation down to these areas. And it's going to make sense when we look at the Nasdaq. For bulls, you're looking for a 145 close, and then of course, a completion of this double bottom in terms of it gets started, and then we move much, much higher. So Apple, another one to watch. Let's take a look at the calls and the puts for it this week. Lots of calls, a decent amount of puts actually. Overall, pretty even through this kind of 140 zone, and 150, lots and lots and lots of calls, guys. So that's going to be another call wall. Will continue to evolve the situation. This one is more blurry. Notice how we've got big amounts of puts and big amounts of calls all floating on top of each other. So we'll have to get some more direction as the markets open. We'll move over to AMC. We'll keep this one brief. Really, I only care about one level here for AMC. Breaking past this level here, 2050 moving averages about to cross to the downside. We saw that rally come through, was short-lived, and then it tried to do it again on Friday, failed to get above. We're looking for that 40, let's call it 180 zone, 42 zone. Once that's closed above, there could be a good chance of participation to that 48 as it fills this gap zone and moves towards that kind of future. Overall, AMC, it's slower than it's been, but I did want to note that a few people asked me about it. Let's move over to QQQ. Now, QQQ, or the Nasdaq, is sitting on its 20 moving average as well on the weekly. Now, where would we like it to go to, guys? Well, of course, the 50 exponential would be amazing, but I'm thinking there's a few different things or a few different ways you can play this. About 340 would be fantastic. We almost hit 352 as the support, and you know that the biggest key level here for Wall Street and the bears is going to be closing really below this point. Now, we did close below marginally, and that looks bearish in itself. If you were looking just at this market, the Nasdaq looks much more bearish than the S&P 500. It did close underneath 360, but it shows that you've got to look at the S&P as the really key market when it comes to bearish cracks. The Nasdaq does its own thing a little bit. It can be the more aggressive bull market, etc., because of the tech. But overall, the S&P 500, if it gets through those key supports, the rest, everything collapses. Whereas the Nasdaq can kind of give you false signals sometimes. So you've got to be careful there. Overall, it is weak. It's looking bad. We move over here to the NDX, which is the Nasdaq, just the real market. And what I'm looking for, and this would be Christmas come early, if we got to the bottom of our trend line. Now, this would bring us to about 14,100. We have, of course, 14,000 being that previous resistance and possible support. That would be fantastic. And if you're a bull this week, then you've got to be nimble and fast as well. And that's the story really coming into this sessions, is nimble and fast. It's on an area where it could be buying through. If it is buying through, you would probably want to go down to something like a 1 hour chart. You would want to then draw up a bit of a trend line like this, look for a break through this trend line towards the bull side. Then you would be looking for, marginal positions up to points like 15,000, 15,200, looking for that gap close over here. These are the types of things that a bull will be doing. It's fast, nimble work on the smaller time frames, and an investor would either say, okay, I like this 20 moving average, or I'm waiting for that next NDX low. And that's a decision that maybe you'll make along with your systems. Of course, you've got to make the decision. Move over here to IWM, the Russell 2000. When we take a look at the channel here, it's stuck in the middle of the range, guys. Look, I don't want to cover this too much. We know that it's very tough to trade in the middle of the range. If you're using a volume profile, you'll automatically see the line just go crazy through the middle. And that's because that's the most amount of touches in a channel. There are different ways to play this that aren't traditional to just buying the stock or selling the stock in terms of the Russell and the index. But yeah, it's trapped. That's how it is. It's in a channel and there isn't really any way to analyze it other than that. Now, where markets have gotten a little bit more interesting has actually been crypto. And let's move over to Ethereum here. I mean, Ethereum had a massive break. I mean, there's some good trades here. We talked about this double bottom. We talked about this ascending. Congratulations, anyone that took that one. We talked about the break of this resistance being key, and it certainly has. And then we talked about the idea that this would go towards the 3600. So I guess that's what we're really looking at right now. The Ethereum market looks fantastic. It's moving up. So does the Bitcoin market. It's holding this 1 hour 20 for now. So this is the zone that the buyers are coming in and becoming committed. But what great little ascending here. I mean, it's really good technicals. And I love that double bottom into ascending. That was fantastic. Let's move over to Bitcoin. Bitcoin also kind of already done everything it wanted to. It's hit this 48.5 zone, which was our resistance. We didn't change this. It's now consolidating, which is fantastic as well. If it can continue to consolidate, then break through again, then that's going to be incredibly strong for the market. And we're moving towards that 52,000 at that point, 50,000, 52,000, and possibly some new highs off these peaks. It's exciting stuff in these spaces at the moment. I want to close this video with a few things. There's big news coming, non-farm payrolls this Friday. We will be covering it, of course, but it's very important that you know that. And then the other thing is streaks and whether we should be overall bearish or bullish. Now, we talked about some bearish scenarios in today's video and bullish scenarios. And I just want to reiterate that being an optimist in the market is the most important thing, guys. Remember, ultimately, the markets go up over time, and you don't need to be a rocket scientist to know that. We have here 7 streakly wins coming into the end of August. Obviously, we took 7 wins on the S&P 500. September now locked in a bearish month. But if we came back in 6 months' time, statistically, 92.9% of the time, the markets have recovered 7.9%. So while you're maybe looking for the optimum level or you're trading and being nimble and quick, overall the markets are an optimistic tool from the statistic standpoint. And I think we need to understand that. It can always be different, but that's important. Big news, make sure you know that the OPEC meetings are going on. If you're trading something like oil, you have to know that. If you didn't, you need to up your game. I'm going to tell you right now because you need to know when OPEC's having its meetings. We've got ISM Services PMI coming out 10 a.m. New York time on the Tuesday. And then we've got ADP non-farm employment change the beginning Wednesday. And then we scroll down and 8:30 a.m. we've got USD non-farm employment change. This is the big number here. This is what the markets will be looking at. Whether they go bullish or bearish may actually fully depend on this number. And that's Friday, 8:30 a.m. New York time. Guys, that's everything. Thanks very much. Remember to subscribe if you enjoyed the video. We went through some deep stuff today, and smash that like as well. Have a great week. Have a great weekend wherever you are in the world. And I hope you're kicking some ass in the markets. Bye for now.